Holy freaking crap. What in the heck is happening right now with interest rates? What does the future look like for home buyers? And will the economic climate that we're in right now finally start to crack the resilient Charlotte real estate market? If you're new to the channel, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte, North Carolina. Thanks so much for tuning in today, guys. We have a good one to unpack here today. So let's jump right in. If you recall the takeaway from the last Fed meeting, it was this. The Fed declines to hike, but points to rates staying higher for longer, while also indicating it still expects one more rate hike before the end of the year and fewer cuts than previously indicated. Now, that statement sent the bond market on an upward trajectory that hasn't looked back since. So where do we stand today? According to Mortgage News Daily, the 30-year fixed rate sits at 7.72%. Now remember, that's for people with exceptional credit and putting 20% down. Now in the Charlotte market right now, we are seeing people getting quoted rates over 8%. Now if they have lower credit scores and less of a down payment, those rates could be even higher. So the question everyone is asking is, when might the Fed cut interest rates? Now, according to Forbes, interest rate futures currently forecast a small chance of an interest rate cut early in 2024. But by next summer, a rate cut becomes more likely than not. Now, based on economic projections from June, Fed officials forecast that rates will decline over 2024, but not by much. And the problem the Fed is facing right now is the strength of the labor market. Now, even though inflation has eased over the past 12 months, people are still working, they are spending money, and job openings are higher than the Fed would like to see, which is keeping upward pressure on inflation. In fact, the reason that rates soared to 7.72% this morning was because of the monthly JOLTS report. JOLTS stands for the Job Openings and Labor Turnover Survey. And the headline from CNBC reads this: August job openings topped 9.6 million, more than expected, as labor market remained strong. It goes on to say that employment vacancies at U.S. businesses unexpectedly surged in August, a sign that the labor market remains tight and robust despite the Federal Reserve's efforts to slow down the economy. And a tighter labor market could put more pressure on the Fed to keep interest rates elevated. So what does all of this mean for the housing market? Well, it means that fewer buyers are able to qualify for a house or even willing to accept these higher rates, even if there is a chance to refinance at some point down the road. Now check out this headline from CNBC. Mortgage demand shrinks as interest rates hit the highest levels in nearly 23 years. Mortgage interest rates just hit a level not seen since the year 2000. As a result, mortgage demand is now sitting near a 27-year low. And get this, total mortgage application volume fell 1.3% last week compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. And volume was 25.5% lower than the same week 1 year ago. And to top things off, higher rates have crushed affordability, hitting both the new and existing home sales markets. While builders had benefited from the tight supply of existing homes for sale, higher mortgage rates are a major concern now. Builder sentiment slipped into negative territory in September for the first time in 5 months. And to put rates in perspective, for a borrower purchasing a $400,000 home with a 20% down payment on a 30-year fixed loan, their payment is about $930 more than it was when rates were at 3% during the height of the pandemic. And everything that goes up eventually has to come down. But what happens when interest rates start to fall? Watch this 45-second clip from Barbara Corcoran and see what she has to say.
Do you feel houses will be more affordable in the future? It seems hard to find a house anymore that is going for the price it is worth.
There's not a lot out there, and Terry's having a hard time, and everybody is. But I can tell you this, house prices are not going to come down. I believe that when the real estate interest rates come down, when the mortgage rates come down, all hell's going to, oh, you're not supposed to say that.
It's morning television, not you're on Shark Tank.
Every buyer on the sideline is going to jump into the market as long as the interest rates come down to 5 or 4%. And houses are going to go up in price all over again. I wouldn't be surprised if they go up by as much as 10 or 15% when that happens.
So what do you think? Will there be a buying frenzy that pushes prices even higher? Drop in the comments below whether you agree or disagree. Now, personally, I think she is 100% correct. With the amount of pent-up buyer demand that continues to get stronger every single month, I think we're likely to see 2021 all over again if rates get somewhere near 5.5%. Which leads me to this. People are always asking if now is a good time to buy a house. And let me be really clear here. I am in no way saying right now is a great time to buy a house. That is 100% dependent on your own personal situation. Now, some of you watching have to move for various reasons, and a lot of you simply can't even think about buying a house right now, either because you don't qualify for a mortgage or you've just chosen to wait this thing out. But either way, unfortunately, I don't see home prices coming down a whole lot, but maybe a little bit as we head into the fall and winter months, where seasonality sometimes warrants that. And if we look at the last 12 months of data in Charlotte, you'll see that the median sales price has gone up or relatively stayed the same since this time last year. Now, if you look at the chart here, the median sales price in January was at $380,938, and currently it sits at $386,910. And even though rates are sky high right now, we still have low inventory, and that alone is going to keep prices stable, at least in my opinion, for the most part. Now, in fact, if we look at this chart from Keeping Current Matters, you'll see that Zillow, Black Knight, and Freddie Mac all showed that home values have been on the rise since January of 2023. Now, those are national numbers, but Charlotte has pretty much fallen right in line. And if you've gotten any value from this video, guys, do me a huge favor and hit that like button and consider subscribing to the channel so we can track this crazy housing market together. And if you need my help in your home search, or you just simply want to talk about your situation, text me, email me, or schedule a Zoom call with me so I can best help you out. Just scan that QR code or click in the description below. A link will take you right there to my calendar, guys. And I'll leave you with this. These are very interesting times and brighter days are ahead. We just have to be patient and things will get better on the other side. Until then, thanks for watching, and as always, make it a great day.